I want to show you this chart of FSM relative to the silver price. If you want to get a good price on this stock, we can see here that we are very close to the historic lows in FSM relative to the silver price. We hit, what was it? It looked like a 10-year or 13-year, something like that, 14-year low back in September 22 when silver hit a low here, and we are headed back up. We're just on the 50-week moving average of this metric of silver relative to the price of Fortuna Silver Mines. So that means that Fortuna Silver Mines is priced relatively low relative to the metal that it mines out of the ground. And historically, we have been above this line, about 0.157, for most of FSM's history. So are the chances that this price will go up relative to silver high? Indeed, they are by historical standards. And because I believe that most silver and gold miners will become banks in the end game, where they will loan out their gold and silver on interest, because there will be no other money with which to make loans, then these companies, including Fortuna, including all gold and silver mines that are responsibly managed, will become the central banks of the not-too-distant future. Anyway, let's get on with this week's Silver Report. First thing we're going to do today is go into deposits for small domestically chartered commercial banks. Those are the banks that are in major trouble, the small regional banks that are losing deposits. Now let's look at this historical chart of deposit changes, percent change from a year ago. So we see that right now we are below zero. So they have been losing deposits from a year ago at about a rate of 1.39444%. That's not 1.39445. Get the number right, 1.39444. Very important there, of the fifth digit from the decimal. But anyway, I am facetious, and let's go back to this era over here. You remember 1985, 1986, blah, blah, blah. What was happening then? Besides Back to the Future, it was the savings and loan crisis of the 1980s reaching a climax. So deposits were fleeing small domestically chartered banks because the savings and loan banks were collapsing. And what was the regulatory regime back in the 1980s, and how did they fix it? Regulators decided to cap mortgage-related exposure to 30% of a bank's balance sheet. Well, let's look at something for a second. It's called the Fed's balance sheet. This is assets, securities held outright, mortgage-backed securities when available. This is the Federal Reserve's balance sheet, the issuing bank of the US dollar. And so we have here the amount of mortgage-backed securities on the Fed's balance sheet as of March 23rd, 2023. That number is $2,605,235,000,000. $2.6 trillion. Now let's look at the entire balance sheet of the Fed, and that number is $8,733,787,000,000. And what is 2.6 trillion out of 8.7 trillion? That is precisely 30%. So the Federal Reserve is at the limit of what was imposed in the 1980s for other savings and loan banks who held mortgage-backed securities and collapsed because they held too much. What do you think happens when the Federal Reserve itself collapses? What happens to the dollar? Well, the issuing bank of the US dollar is the Federal Reserve. So when it crashes, the dollar crashes too. It's just basic logic, people. This has made big news and is making the rounds in the gold and silver circles, but I want to try to interpret this a little bit more soberly. Not that I'm not excited about this, I am. I just want to manage expectations here through Austrian school logic. Okay, so the title says, China settled its first LNG trade in yuan, but gold remains the bigger winner in the global de-dollarization trend. Okay, fine, I agree with this headline here. Let's read the first three paragraphs. The US dollar's role as the world's reserve currency continues to be tested as nations settle commodity trades with the Chinese renminbi. Tuesday, the Shanghai Petroleum Natural Gas Exchange announced that it completed its first yuan-settled trade for liquid natural gas between China's National Offshore Oil Corporation and France's Total Energies. Okay, that's pretty much all we have to know about this deal. So there's a whole bunch of natural gas being traded between France and China for Chinese yuan instead of US dollars. Now, this It's exciting, okay? It does relegate the dollar more to the back door. However, does it really get away from the dollar? Not really, because the dollar, remember Extra's pyramid. You have gold and silver, silver arguably below gold, but let's just say gold and silver, and then the US dollar, and then other currencies that are derivatives of the US dollar, which includes euros and yuan. Why is the yuan a derivative of the US dollar? Because the main driver of the yuan is its trade relationship with the United States, which is most of its exports. And so the People's Bank of China keeps the yuan within certain windows. And so the People's Bank of China's monetary policy more or less follows the Fed and tries to keep the yuan within exchange rate windows. So basically, the yuan is still the US dollar, even if it's using the yuan instead of the US dollar. If the yuan strengthens too much relative to the US dollar, then the People's Bank of China have to weaken the yuan in order to keep that exchange rate within certain windows. In order to get away from US dollar dominance, you have to go beneath the dollar in the pyramid. You can't go above it. Remember, the dollar and above the dollar is derivatives of the US dollar, which includes the yuan. And so in order to get rid of the dollar and to get out of the dollar trading regime, you have to go beneath it. You got to go to gold and silver. Once nations start trading gold and silver, then they are really, in a bona fide way, getting out of the dollar system. But trading in yuan, it's a good scaffolding. It's a good exercise in getting away from dollar dependence. But is it getting away from dollar dependence? Not exactly. When you have a banking crisis and a dollar crisis at the same time, that is when people panic into real money, into gold for the banks and silver for the public. It's going to be hard for us to fathom how fast this panic is going to be. It's going to be very fast, and people who chase it are not going to be able to acquire a lot of stuff in terms of gold and silver ounces. But those who have already stacked should be fine. I have the feeling that the last fulcrum of the support of the current monetary system is the housing market itself. And when it buckles, everything buckles with it except the base of the pyramid, which is gold and silver. And after that, human civilization can rebuild another one of Extra's pyramids, and it should be fun and an educational experience for our children and grandchildren to enjoy.